Today I'm going to explain to you exactly how an offset account works and how it saves you money, the benefits of using one over redraw, and how it will impact your home loan repayments. And to keep up to date all things property and finance, remember to hit that subscribe button below. How does an offset account work? An offset account lets you save interest on your home loan, and this is based on the money you hold in your offset account. It means that any money held in your offset account will directly save you home loan interest. Let's take a look at how this works. So in this example, you can see that in the red, we have a home loan of $100,000. Each month, you'll pay on the loan amount owing. The green is the savings account you currently have, and it has $50,000 saved up at the moment. Each month, the bank will pay you interest on this money. Makes sense, doesn't it? You pay interest on your home loan and you earn interest on your savings. The beauty of an offset account is it puts your savings to work. So rather than having your money in a savings account, you transfer it over to an offset account instead. Looking at the same example, but this time we have the $50,000 in an offset account instead of a savings account. This is where the magic happens. So that money is now put to work, and instead of earning you interest on your savings, you save interest on your home loan. And this is what an offset does exactly. It saves you interest on your home loan rather than earning you interest on your savings. This is important because home loan interest rates are always higher than savings rates offered. Looking at two examples and starting off with NAB, there's more than a 1.5% interest rate difference between the two. That is the difference between your savings and your home loan interest rate on offer. It's worth noting that the savings account is an introductory offer too. This means that after the first 4 months, your rate will decrease to 1.1%. And it doesn't take you long to realize how an offset could help you save heaps. This example is from Westpac, and the story is much the same. Like NAB, you'll only receive 2.6% on your savings account, and to receive this, you'll have to jump through hoops. If you don't meet their criteria, then you'll only receive a 1% interest rate. But let's just say for a minute that the interest you earn on your savings and the interest you pay on your mortgage is the same. That is to say, they're equal. The question then becomes, does it still make sense to have an offset account, or is it better to have a savings account instead? This is a great question because more often than not, to set up an offset account, you'll need to pay a fee, either an annual or a monthly maintenance fee. And it varies from $120 to $395 per annum. If you could avoid this fee, it'd make complete sense to have a savings account, right? Wrong. Even if the interest rates are all equal, it's still better to have an offset account, because when you earn interest on your savings, you're actually earning a return on an investment. Depending on how much interest you earn will dictate how much tax you'll have to pay. And it's no different to, say, having an investment property. With the rent you receive, you'll also pay tax on that income. But with an offset account, it's completely different. As you'll save rather than earn interest, it means that even with all things being equal, it's still better to have an offset account because it'll mean you won't have to pay tax on the interest you save. What about redraw? Could I use redraw instead of an offset account? This is how redraw works. So back to the example of having both $100,000 in your home loan and $50,000 in your savings. For redraw to work, we first need to transfer that $50,000 in your savings account into your home loan. This then means that instead of owing $100,000, that will instead owe $50,000. And this is the amount you'll pay interest on your home loan. But what you'll notice is that the limit, that's the home loan limit, will remain the same, and that's at $100,000. This means that at any time you can take the balance to the limit, withdrawing the money you've just put into your redraw. Redraw is essentially additional payments on top of your minimum. This money saves you interest on your home loan. So comparing offset to redraw, they both do the same thing, and in both cases, you'll save interest on that $50,000. They are essentially identical, but the method is slightly different. Then why would you choose an offset over a redraw, especially when redraw facilities in most cases are completely free? Well, there's one major difference, and it could literally cost you thousands of dollars. And later in this video, I cover just this and the reasons why you'd select an offset over a redraw facility. What you're probably wondering by now is, if you have heaps in your offset account, then will it reduce my monthly mortgage repayment? The answer to this question is yes and no, and let me show you why this is the case. And it will really come down to the repayment type. With an interest-only home loan repayment, you'll only pay back the interest owed each month. Think of it like a savings account, but in reverse. If all you do is pay the interest only repayment, it'll mean you'll never pay off the home loan, And here we can see an example of just this. With the original mortgage balance being $300,000, still after 30 years of interest-only repayments, you had the same amount owing. With a 5% interest rate, your interest-only repayment would come to $1,250 a month. Now, if you had an offset facility, this would indeed reduce your repayment. Say if you had $100,000 in your offset account, this would mean that instead of paying interest on the $300,000, that indeed it would reduce to $200,000. So with this, your offset would actually help reduce your interest-only repayment down to $833 a month. And this is a direct result of what we have in our offset facility. Now with principal and interest repayments, your repayments will remain the same. However, the portion which goes towards your principal, that's a pay down of your home loan, will increase, and the portion that goes towards your interest will decrease. It essentially means you'll be able to pay off your home loan quicker. Let's see how this will work. This is how a principal and interest mortgage looks over 30 years, and we can see that gradually over time, the mortgage is paid down to zero. Based on our previous scenario, our principal and interest repayments would come to $1,610 per month. And as before, we have $100,000 in our offset account. And like before, it'll reduce the amount of interest you pay. But instead of reducing your home loan repayments, this time your repayments will remain the same, but what will change is the amount that goes towards your principal. This is what helps you pay off your mortgage, and the amount that goes to interest. Let's see how this works. We can see now the big difference it makes in this scenario, and the amount that goes into your principal for your first repayment will be more than double, and it essentially means that you're putting more money into paying down your home loan as a result of your offset facility. The more money that goes into your principal, the faster you pay down your home loan. And in this scenario, we can see that it would actually help you pay off your home loan 10 years faster by having this money in your offset account. Now you know the magic of having an offset. It's time to put it to work. Firstly, not all banks allow you to have multiple offset accounts. So before choosing a lender, you'll want to ask your broker or banker a couple questions, including, is my offset fully transactional? And does it come with a debit card? How many offset accounts can I link to my home loan account? And can I have an offset account in different names to my home loan account, or does the offset facilities have to be the same as my home loan account? If your lender offers you multiple offsets, this is where you want to use your offsets as much as possible. So you could set up an offset account for your holiday savings account, an account for your bills. You get the picture. And in this way, all the accounts you hold will be used towards saving interest on your mortgage rather than earning interest on your saving. Now, the real reason investors choose an offset over a redraw is for tax reasons. Primarily, it's because when you redraw, you're essentially reborrowing the money from the bank. And for it to be considered tax deductible, you'll need to use it for an appropriate purpose. So for example, if you use $60,000 from your redraw, which was available for, say, a holiday, then come tax time, this portion may not be considered tax deductible. Whereas with an offset account, you don't actually reborrow the money, as it's sitting in an everyday account and you're simply spending the money you currently hold. And because of this, you won't need to worry about where this money goes. And because of this, your debt is protected and will remain tax deductible. And it's always best to seek advice from a financial professional like an accountant, because everyone's circumstances are unique and different. And here at Hunter Galloway, we get home loans approved. So if you're looking for a great mortgage broker, we can help. Reach out and visit us online at huntergalloway.com.au or call us on 1300 088 065. We help Australia-wide and don't charge a fee for our service. Until next time, thanks for watching.